3 years back, just before COVID. So one of the reasons we started this was because we are a research-based policy think tank in NCR. We started our think tank in October 2018. And as COVID was setting in, we realized it's very difficult to conduct research in this environment. So we said, okay, we want to work on contemporary economic issues. And to work on contemporary issues, we either are doing our own research or we bring in the best minds across the world to come and sit with us and talk on contemporary issues, global and domestic. And we were very fortunate that we had the privilege and honor to host more than 220 such webinars since we started. And we had a blend of foreigners and Indian scholars speaking to us on contemporary issues which were national or international. I must proudly share with you, we have had the privilege of 4 Nobel laureates who have come and presented their research with us. And we also had the privilege of doing a series for the G20, for which India was holding the presidentship last year. We worked on new international economic order. We also did, again under the G20, for climate. We have yet not completed 10 webinars on that. We are still halting it at 6 because the webinar series is booked so heavily. We also did on women empowerment. Again, that series of 10 lectures could not be completed because there were so many other pressing topics that were coming up repeatedly. As you know, the issue that we have on hand today is also a very interesting and important issue. In fact, Mr. Verma chaired a session today in the morning. We had a workshop talking about digital India and way forward. And in the session that he chaired, of course, issues of financial inclusion, NBFCs, and his own important area of housing finance came up. So the topic is extremely relevant, and I think it's very timely and contemporary because we are on the cusp of having a new government in about a week's time. And therefore, this could be a very important agenda item when the new government takes over. To chair this session, we found none else better or could be better than Mr. R.V. Verma. He'll be chairing the session. And as a brief introduction to Mr. Verma, he, in his long career spanning nearly 40 years in the financial sector, housing and mortgage industry, including regulation and supervision activities, Mr. Verma has held several leadership positions. Actually, today morning, we were discussing, I think Mr. Verma has the largest experience in regulation. He started his career with the Reserve Bank of India, a regulatory supervisory body, then came to National Housing Bank, a regulatory and supervisory body for the housing finance companies then. Now, of course, the regulation part is back with the RBI. And then he served as the chairman of the pension, as the chairman and whole-time member at the Pension Fund Regulatory and Development Authority. So I think vast experience in terms of regulation and supervision. He was twice elected by member countries as chairman of the Asia Pacific Union for Housing Finance, first chairman of the board of India Mortgage Guarantee Corporation. He also served as a member on a number of committees appointed by the government of India and the Reserve Bank, and played an important role in the formulation and launch of various national schemes and groundbreaking programs on affordable, low-income housing and informal sector housing. Mr. Verma also served on a number of boards, including part-time chairman of EU Small Finance Bank, India Country Chairman of Velocity, Director on the boards of SBA Pension Fund and Encore ARC. He also served as member of the advisory committee of Insolvency and Bankruptcy Board of India, IBBI, and consultant to the World Bank Group. I remember a few years back when I was RBHA professor at IIM Bangalore, under his guidance and advice, we had held an international conference. I think that was the first and the last conference. We held an international conference supported in India by NHB and commercial banks and from America by the International Monetary Fund. That was one of its own kind of a housing conference we did in India. Mr. Verma completed his studies, Masters from Delhi School of Economics, prestigious place, and MBA from FMS, another prestigious institution. He played a pivotal role in the introduction and development of the residential mortgage securitization market and mortgage guarantee scheme in India. In nutshell, Mr. Verma has played a very important role in the housing sector for a very long time, both at the grassroots and at a leadership role. With this, I hand over the session to Mr. Verma to take the proceedings further. Mr. Verma.
Thank you, Mr. Charan Singh, my very dear friend, for a long time. Welcome to this webinar, all my dear panelists. Welcome all the participants. It's a privilege and pleasure for me to be here with you all this evening or morning or afternoon, I don't know, or night. So it's a great opportunity for which I'm very thankful to Charan Singh and EGROW. Very heartfelt gratitude for all their support which they have been giving so far, and of course for all the stimulating discussions and his guidance and his talk and advice that we have been taking from time to time. So it's a pleasure to be here. We have today a very eminent panelists who are, I'll just name them out right now. I mean, we have Patrick McAllister. He'll be the first speaker. Then, of course, we have Prashant. I am Ahmedabad professor. Then we have David Smith from Affordable Housing Institute, Boston. We have Shilpa Rao, who is a very senior member at the Reserve Bank Innovation Hub. We have, of course, Carmen Vicelich. She's the global MD and CEO of Vicelich. In a little while, we'll be joined by Arun Sharma, who is heading the digital team in the World Bank in Delhi office. There's some conflicting program, so he requested that he should be if he could join a little later. So we'll be expecting him in a little while. I'll be giving a more detailed introduction of the speakers right before their presentation. So just to set the context a little to the best of my ability, we have today a very important theme of the role of data and digitalization in affordable and micro housing sector. So as all of us know, I'll have very few slides, just 2 to 3 slides, which I'd like to share now.
So you're on mute, I think, if you're speaking.
Yeah. So thanks, Shilpa. So there you are. We have, I mean, this world is not getting to be a better place anyways for us to live in. And I guess, everybody is responsible for that. As per the World Bank reports, by 2045, the number of people living in urban areas will increase by 1.5 times, that is to 6 billion. 330 is just to give a little impression on the kind of problem or the challenges that we have at hand. Can you see the, yeah, sorry. So we have across the world people living in substandard housing from 330 million now, which is likely to grow to 440 million by 2025, and 200 million households in developing countries living in slums. In the Indian context, urban housing shortage is currently estimated at around 18 million. Urban population is projected at 40% of total population by 2030, from the present 36%. 18% of the urban population live in slums. So currently we have a problem for housing the urban population, particularly those who are living in the slums and who are constituting the bottom of the pyramid, to look after their interest in terms of housing. With all this, we know that the people in the lower segment of the population are most vulnerable to ailments, to diseases, to through lack of education, lack of social security, psychological security, emotional security. They're vulnerable in every possible way. And in that context, I've often been reminded of a very important quote from...
Sorry to interrupt, Mr. Verma. Could you share your screen? We can't see your screen.
You can't share. 1 minute. Can you see?
Yes, we can.
Okay. Yeah. Sorry. So in that context, in fact, I've been I often recall this quote of Desmond Matthew, who is an American sociologist, and it says a national affordable housing program would be an anti-poverty effort, human capital investment, community improvement plan, and public health initiative, all rolled into one. This is the kind of impact which affordable housing program at the national level can create. And all these are issues that need to be addressed. So a massive effort in the direction of a national affordable housing program at the government level, at the all stakeholders level, the regulators, the financiers, and of course the borrowers and the builders. It becomes extremely important to address the housing needs of the population, particularly those in at the end of at the bottom of the pyramid. So we have in fact this quote captures a whole lot of ideas, whole lot of thoughts, whole lot of philosophy, and which are in a way we are seeing at the ground level operating, whether it's the policies of the government or programs of the government or schemes of the government, combined with a very vibrant market to address these needs, the housing needs of the people. So it's all the stakeholders who are coming together to address. Now, to the extent there are gaps in the market, to the extent there is gaps in understanding of the stakeholders, we are not in a position to really address it completely, but the efforts are on. And I think every country has done its bit, but it's a long way to go still. Share. So sorry for this little bit of glitch. So taking a cue from my earlier slide, we have the housing. We have to look at affordable housing as a full integrated ecosystem, and which has various components, of course. The affordable housing, the magnitude is so intense and so extensive that it has to be addressed through a very overarching ecosystem, which is comprising of various stakeholders, various players. There are complex dynamics within it. There are a lot of interdependent variables, which require a very high degree of integration. The ecosystem requires very intense and close and supportive regulation and coordination amongst various stakeholders. We all know that housing is a major driver of economic growth and has multifaceted impact on people's lives, whether it's their earning capacity, it's their health, education, and their welfare of the family, etc. So it touches the lives of people at some stage or the other. Well, with this, I think I add these 3 slides. What is important is that for us to really address these issues, we really need to look at it from the prism of different stakeholders. So starting with the government's role, it's very important that the government understands the impact or the importance and criticality of affordable housing and the way it connects with the rest of the economy through various multiple linkages across all the sectors. It does investments in housing, as all of us know, is a major contributor to the GDP. It's major contributor to employment. It's a major contributor to the local economic activities. But the problem is, of course, urbanization, which is at a very rapid pace and which results in a lot of migration. It results in proliferation of slums and squatter settlements. So that's something over which I don't think anyone has control. The governments have tried different models, different kind of combinations of policies and the programs and geographies, but it hasn't really worked. So it's a very natural dynamic that the urban centers keep growing and the urban economy keeps thriving. It's a major revenue earner for the government and for the local government, for central government, for everyone. But the casualty is, of course, the quality of housing, the quality of life of people, which results in overall threat to the community health, to the health of all the people living in the areas, to environmental hazard. So it is important that the governments do understand and appreciate the criticality of addressing the affordable housing issue and criticality of investments in housing, addressing the issues arising out of rapid urbanization and the way forward. I'll look at it from the point of view of the data and digitalization initiatives which are happening in the economies, particularly to address this problem. We have a problem of scales. We have a problem of numbers, and nothing short of very quick and rapid technological approach through data and digitalization can really solve this. When we are looking at massive scales, we are looking at mass housing, we are looking at scales both on the demand and supply side. But fortunately, we have had very good initiatives which are sustained over a period of time from the Government of India when the Digital India mission was launched in 2015. And we have had a large number of, a slew of, in fact, measures in the financial sector particularly, which is now kind of connecting with all the sectors. And a lot has happened in the financial sector space. for the banks, the lending space, for the non-banking finance companies, for housing finance companies. And there has been whole host of digitalization and the data analytics. Based on that, the scales of funding, scale of financing has happened, has improved. It has supported risk mitigation measures. So overall, it has improved efficiency, affordability, and accessibility for the people to affordable housing and affordable housing finance. We have experts to talk on this from their global experiences. So I'll not go any deeper on that issue. But yes, we recognize that we have to have very supportive policy regime. We have to have very supportive programs from the government and the regulators. We need to have right kind of products, both on the real economy side as well as on the financing side, for the people to be able to afford to buy a house at a price which they can afford to pay, and they can afford to take credit at the rates which they can afford to pay. So integrating the two is a challenge always, but that should be the way to go, which to make the real economy side of the housing and the financial sector side of the housing more sustainable over a long period of time. Well, there are players. We have products and processes which have all been digitalized, which are sitting on a lot of data inputs, data analytics, and based on that, we have had very efficient products launched across the financial sector, both housing and non-housing, and which is working well. Of course, it does become a little worrisome for the regulators at times. Unless they get a full hold on it, they don't feel very comfortable. But it's been a very good, a healthy kind of interactive relationship between the regulator and the regulated, and the digital journey of the various sectors has begun, and it's evolving fast and getting maturer by the day. So we do have a lot of learnings in the international space, and I'm sure this seminar will also bring to light the experiences of the practitioners and the experts who have earned a lot of expertise in their field. So I will end there, and just a kind of highlighting a very integrated view of affordable housing and the role played by data provision. Data is being generated at an amazing pace every day, and it's being stored, it's being sanitized. There is data strategies, data policy, data protection, data privacy. So all these market infrastructure legislations are in place, and they have to be in place. So there is a whole lot of utilization and application of data and digital formats by the lenders, by construction agencies, by policymakers who need the data the most actually for their informed policy making. And lenders do need data on their consumers and the buyers to have very informed risk management practices, and also very informed decisions on appraisal, underwriting, pricing, etc. So it is playing out in every way, and it's generating a lot of confidence across all the stakeholders, and also bringing a lot of value to the processes and practices in the industry. So I'll end here. I'll conclude finally, and it will be my pleasure to introduce each of the speakers. To start with, I'll be calling on Patrick McAllister. Patrick has about over 20 years experience in the public, private, and non-profit sectors, dealing with residential mortgages, financial inclusion, creating enabling environment for affordable housing finance. In his current role, Patrick oversees the development and implementation of Terwilliger's Center for Innovation in Shelter. shelter strategy to improve the entire ecosystem around housing. Patrick served as the Asia Director for Housing Finance and Market Development, where he led innovative housing finance approaches, including creation of new corporate structures, investment vehicles, microfinance, savings, and advisory services in South and Southeast Asia. As the founder of Corys Consult, he advised clients, including the Bill and Melinda Gates Foundation, Citi, and the World Bank Group on financial inclusion, consumer protection, and market development. Patrick also served in the US federal government in the Department of Housing and Urban Development. He's a Wharton certified expert in housing finance, bonds and securitization, and certified expert in financial inclusion policy from the Frankfurt School. Patrick brings with him very rich experience and insightful practitioners' perspectives across several jurisdictions. Patrick, I hand over to you. Welcome again.
Thank you. Thanks, Raj. And thanks for that introduction. I'm going to try to share my screen here and let's hope it works. So I was asked to speak on the topic of the lived experience of the economically weaker sections and the low-income groups in building and improving their homes. Let me just see now. This is not sharing. There we go. Okay. Yeah. Can you see my screen?
Yes.
Yes.
Yes. Okay, great. Yeah. So here at Habitat, we believe in a world where everyone has a decent place to live. And for us, a decent place is not really a mortgage. It's not really the four walls around you. It's what makes a house a home. And traditionally, for 70% of the world's population, that is not a capital intensive or climate intensive house. It is small scale, it's incrementally built, it's very light on the environment. And women tend to play the primary role in ensuring a decent place to live for their families. I don't want to, say that it's all doom and gloom, because it's not in any way. And we are all excited about the digitalization of the world. It's an exciting topic. We all walk around with what would once have been considered supercomputers in our pockets. So we understand that data and digitalization hold tremendous promise for a range, if not all, of the activities that we have in our lives. But we also know that equity has become a real intractable problem in the world. And those with the most to lose, including their health, their homes, their livelihoods, and even their lives, they tend to get the fewest resources. So as we're really excited by this digital dream, I want to keep at the top of our minds how the 2.8 billion people in the world who don't have adequate housing at the moment can benefit from these advances. And so I want to show you a little animation here of how most people in the world are housed. And as you can see, it's step by step, and it's very small steps that build the houses that they live in. It can take 15 years or more before a family has a solid home like the one you see here. So how is the digital revolution helping them? Well, people without a lot of money tend to live relatively lightly and informally, so they have a smaller digital footprint. There we go. Yeah, so they have a smaller digital footprint. Innovation and fintech can't always reach them. In a way, those new technologies are kind of playing around the edges for people who have more of a digital footprint in the world. You can access that data and then provide them with digital services. But if you don't have that initial digital footprint, then it's going to be very difficult. And we need to keep that in mind as we build these products. We don't have proper security that would facilitate the tenure that they do have may not be digitized and may not be accessible to the new product that we can avail in the market. They also tend to borrow and save informally. For example, less than half of Africans have a formal bank account, less than half. So they don't show up in the traditional digital platforms. All work in this innovation space. And India, for example, TCIS is working with a company that's bringing together the banks that the low-income populations are working with and the digital platforms that most of the future of banking will be on. But we know that we're missing a big portion of the population. We also know that finance favors developer building. So currently, when you talk about housing finance, you're mostly talking about mortgage finance, and most of that mortgage finance is built around new developments. Prop tech, I wanted to mention, is also mostly built around developer finance. So these solutions don't work for 70% of the world's population. We have data that shows that the lowest developer-built house costs, on average, in the developing world, somewhere between 15 and 40,000 US dollars, which I think is about 12.5 to 33 lakhs rupees. And that amount is really untenable for most of the population. People who are school teachers or policemen, they can only access mortgage finance. If they could access mortgage finance, it would only be for maybe a quarter of that amount. So how are you going to, as Mr. Verma has said, connect these two disparate pieces of the housing ecosystem? You have developers that are building properties, and you have people that need the property and afford mortgage finance. And finally, I want to say a few words about environmentally sustainable housing. Construction, as many of you know, contributes nearly 40% to greenhouse gas emissions globally. And housing is most of the built environment. People building in traditional and incremental ways have the lowest environmental impact. They use carbon, they use less water, and they produce less pollution. But green finance doesn't recognize this. The taxonomies and funds and development banks use to qualify investment as green don't consider the low touch products most people in the developing world are using to build and improve their home. And that means that they're excluded from these preferential financing vehicles. So I think we need to change the those that are built in ways. I just want to leave you with this quote. This was a quote by Henry David Thoreau, and he actually said this in 1860. What's the use of a house if you haven't got a tall on? He was very concerned at that time that housing was going in the wrong direction, and in traditional house with environment. I think that's even more. I think as we consider the way low-income people in the world are housed and are being housed, and obviously that the digital economy and digital products and services are making in their lives, we need to be sure that we're including everyone in those solutions. So that is for me, and I'll turn it back to you, Mr. Verma, to continue this presentation. Thanks very much.
Thanks. Thank you very much, Patrick, for your very thought-provoking and insightful presentation. Patrick, of course, I forgot to mention, he's a senior advisor at the Habitat for Humanity International. It was indeed very, very insightful, and it leaves a lot of thought for us to kind of ponder about. I will now request Professor Prashant Das. He's the Associate Professor of Real Estate, Finance and Accounting area at the Indian Institute of Management, Ahmedabad. Prashant has been, he's a PhD, of course, the chairperson of the Finance and Accounting area and an Associate Professor of Real Estate at the Indian Institute of Management, Ahmedabad. He has been a guest faculty at Harvard University, University of California, Irvine, and a visiting faculty at various universities in China and Romania. Earlier, he served as an associate professor and the director of the Real Estate Institute at EHL, Lausanne, Switzerland. At IIM Ahmedabad, Prashant developed an agri-land price index, which is very, very complex subject, and an art price index for India, for the country. I must congratulate you for that, Prashant, getting an opportunity to do that earlier. He has authored over 25 research papers, 10 cases, and 3 books, all eminently recognized by the international bodies. His research interests include commercial real estate, private equity, REITs, MBS, behavior real estate, and sustainability. Prashant earned his PhD from Georgia State University, Atlanta, US, MS from Texas A&M University, College Station, USA, and his bachelor's architecture from IIT Roorkee, India. Prashant, over to you.
Thank you, Mr. Verma. It's an honor to be introduced by you. You know, I've been your fan for nearly over 2 decades now, and there's so much for me to learn from you. This room is full of stalwarts. I have recently started working on Indian real estate markets. I moved to India just 3 years ago. But today, as an academic, I'm here to present some food for thought. Primarily, as Mr. Verma said, in the financial economy side, but also on the real economy side. Patrick's presentation very aptly focused on non-conventional financing. I will stick to conventional financing in today's presentation, perhaps because there are some low-hanging fruits yet to be collected by the lending sector. I hope my screen is visible to you.
Yes, Prashant, yes.
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 Professor Singh, the conference that you were talking about at IIM Bangalore, I was there. And I really loved it. That was definitely the first one. I assure you that won't be the last. This year in December at IIM Ahmedabad, we are organizing an international real estate conference. I invite all the panelists and all the participants to attend, to present, and to share ideas. So here is the context for my talk today. And it relates to seniors because I'm going to focus on exploiting data analytics for senior housing finance. This is the current breakup of senior versus non-senior citizens in India. Seniors stand at around 10%. But in next 3 decades, their proportion is going to double. We are talking about from 150 million, the senior housing, senior population would reach to 350 million. This is a humongous number. And I'm sometimes surprised to see the lending sector's obsession with serving the median age households only, because I'm going to elaborate on 2 fundamental opportunities for lending institutions, not only to do business for themselves and survive and thrive, but also an opportunity to serve a segment of population that has for a very long time been ignored, both from the financial institutional standpoint and from the policy situation, because India is no more going to continue uh, to uh, to reap the dividends of the young age of the population. India is going to convert into an elderly citizens country before the dawn of the century. So what are the problems with senior housing? I will go straight to the point, and that relates to the affordability. As of now, in the senior housing segment, the demand is for nearly 2 million housing units. By 2030, it'll increase by 50% to 3 million. Market size would be of nearly about 12 billion US dollars. But guess what is the supply of senior housing in India today? In the formal sector, is barely 10,000 units. There is a huge gap, and that gap needs to be filled. And housing finance institutions and real estate developers have a major role to play there. So as of now, those 10,000 units work on 3 financing models. The most prominent model, 85%, is outright purchase. So this is purely a real economy sector solution to senior housing. Some developers would come forward, create housing societies or communities where the design is more amenable to senior citizens. But it really doesn't help senior citizens because they're expensive. You know, housing affordability, we all know, has been a major issue in India. So what is the other extreme? So rather than buying, people go and rent. So operating leases, this is barely 5% of the senior housing segment. And, operating leases come with their own share of social and psychological security issues because, as Patrick was talking about, the tenure is not very secured, and our Model Tenancy Act in India is relatively new. It has not been enforced. It's still a Model Tenancy Act, and there is so much work to be done that operating leases obviously are not popular, just 5%. And the remaining 10% are long-term leases. So the senior citizens would buy leases for, let's say, 50 years. And that 50 years is excessive because let's be real, after retirement, the longevity of the households, of the individuals is finite. And someone ending up paying for 50 years worth of lease is just not fair. And that is related to some research that has been done by EGROW Foundation in India. And we have had some very appalling, very disappointing findings that they have reported. I guess this is a 2018 study by EGROW Foundation. I'm just showing you some highlights. They say that majority of the 70 plus in India lead a lonely and neglected life. This is a very ugly truth for proponents of Indian society who like to believe that senior citizens in India tend to bunk in with the next generation. In fact, everyone likes autonomy. Everyone likes to sleep on the kind of pillow that they prefer to sleep on, and that independence is not there. And in addition to that, the senior citizens are not happy. They feel that they're living a lonely and neglected life. A bigger problem is the reduced income. I haven't shown you that graph here, but nearly 65% of senior citizens in India either have no plans for retirement because they don't see any hope of income after retirement, or they have no option for retirement at all. But their working capabilities and their skills, of course, get compromised after retirement for many of them, and their income falls, but at the same time, their expenses increase. So housing for seniors is not only just a social or physical challenge, it's also a major financial and economic challenge in front of us. And they say it categorically that financial problems they continue to face even after having good net worth value. So what makes their net worth value? So I was looking at an RBI research, and most of their net worth is in the real estate that they own. This real estate asset is something that they have built over decades of hard work because the mortgage payment compromises most of their quality of life throughout their youth and throughout their age when they were supposed to enjoy their life. And when the senior citizens retire, that asset is going to stay on the face of the earth for a very, very long time. That simply means that a person spends fortunes of their income just to buy an asset that they are barely able to consume during their lifetime. In fact, hardly perhaps 20 to 30% of the asset is consumed. So why do they end up paying for the 100% of the asset if they're not going to consume it fully? So we were perplexed by these questions. So I had two very smart students, MBA students at IIM Ahmedabad. They looked at longevity data using National Sample Survey information, and they did some simulations from the standpoint of lenders. And they looked at a large portfolio of reverse mortgage given out to senior citizens in India, given their longevity profile. I will not delve too much into the details of the study, but here are the findings. The findings suggest that even after including all sorts of risks that lenders are faced with when they give out reverse mortgage loan, the aggregate unconditional portfolio IRR that they would enjoy after loss severity of around 30% on the loans that go south would be in the range of 8 to 8.4%. This means just a few risk protection measures, such as reduction in the loan to value ratio compared to traditional loans, or a few extra basis points in the interest rate. And this market is estimated to be around 29 million households in the next 10 years. And the overall market size, assuming that the lenders can only capture 25% of the overall market, would be 200 billion US dollars. It surprises me why the lenders have such a lukewarm attitude towards reverse annuity mortgage. Mr. Verma was very active in promoting this product a decade ago in India. Even today, the National Housing Bank has been very receptive of the idea of promoting reverse annuity mortgage, and they have been working on ways to see how to improve the upkeep of this mortgage type. So this is one opportunity that is right there in your face, but lenders just fail to capture this, and this is surprising. My second proposition is slightly hypothetical, but very pragmatic. And that relates to tenure sharing. We know about car sharing, but this proposition is about senior citizens sharing a tenure, because the problem statement says that the useful life of a home that a senior citizen buys is much, much larger than their own remaining life that they're buying it for. So why not share the tenure with seniors in sequence? That is the idea. So
Prashant, you have to go a little fast.
yeah, so this is based on data analytics. Data analytics will lead to survival probabilities. Based on those survival probabilities, we will create different buckets of remaining life of senior citizens. And then the builders will distribute the tenure useful life of a home across senior citizens of different tenures, and they can create different sequence of seniors with different longevity patterns. And using data analytics, it's very easy to do that. If this is scaled up, lenders can also securitize such product for financing senior housing. So that is the end of my presentation. I will pass the baton to the next speaker. Thank you, Mr. Verma.
Thanks. Thank you, Prashant. This is something which needs to be pursued definitely, and I think we can collectively join the National Housing Bank also. Thanks for your presentation. Very insightful and very unique. I move to the next speaker, is David Smith. David is uh, founder and CEO of Affordable Housing Institute, AHI, in Boston. He has a career spanning 47 plus years in the affordable housing sector. David's work in affordable housing, particularly for needy population in the informal and weaker section, has been globally recognized and acclaimed. Having twice founded companies that have become leaders, first in the US and now globally, David is a visionary, which I can vouch for definitely, because my close association with him in the past. He has always believed in making things happen. We had David for programs on the International Union for, Asia Pacific Union for Housing Finance. And he came down all the way with his presentation. That was a very path-breaking presentation which he gave to the international audience. David is a highly acclaimed speaker at various international fora and has published hundreds of articles over the decades and teaches at the Harvard Graduate School of Design and Executive Education courses on affordable housing, real estate development fundamentals, and real estate finance fundamentals. David, over to you for your presentation.
Thank you, Raj, and thank Patrick and thank Prashant for really great opening discussions on two of the important topics. I'm stalling for a moment because I want to see if I can get my share screen to work, as others have commented. Let's just see if I can do this, share entire screen. Let's try that. Yes, but that's not what people want to see. People want to see this. Can you see my slides now?
Yes.
Okay, fantastic. I will talk fast, but I hope that the organizers will put the slides on a website or a follow-up so that you can go back and appreciate the jokes. The future has arrived. It's just not evenly distributed. And among the many paradoxes of digitization is that in a city such as Manila that you can see there on the screen, the people who are informal know much more about the people who are formal than the other way around. And yet there is this sense that the people who are formal up in their towers in the haze can solve the problems of the people who are informal, even though they don't understand them. So let's look at the level of the household. The biggest advantage of digitalization is that it makes possible to facilitate capital flow. Makes it possible to put money and capital into the hands of people who, like Patrick's situation, are self-improving. And that gentleman sitting there in the front of his house, fronting on the street, which I can attest because I took this pictures on a dirt road in northwestern India, he is a complex underwriting proposition. And people will say no to lending to him for any of 6 reasons. And I've listed them there. Only one of them is valid, that he can't pay back the loan. The others, they can't document it. They're not sure his income is reliable. They're not sure he's insured. They're not sure that if they make the loan, somebody from the RBI won't come down like a ton of bricks. And they can't make enough money off of them. Though 5 of those 6 problems can be solved with better data if the borrower is willing to provide it, if the data is reliable, if the cost of assembling and analyzing the data is low, and if the analysis can be done fast. And for the second, third, and fourth of those, for the first time in human history, all those are now possible if you want them. And the last part is we want to use digital data to make the borrower's status, the borrower's income, and the borrower's housing observed, observable, and documentable. But when you do that, we start to get into a paradox. The first paradox of banking is that people who are informal deposit their savings into an institution that will not lend money back to them. The poor person is trusting the bank. The bank is not trusting the poor person. The second paradox, regulated financial institutions are often more expensive than unregulated ones. Now, unregulated ones include moneylenders, they include loan sharks, they include that other kind of problem. But the regulatory overlay, which is acceptable and a normal cost of business in the formal sector, crushes small loans with informal households. They get excluded even though nobody's trying to exclude them, which is why, as Mr. Verma and I know, the non-bank housing finance companies rise. And they rise as long as they can be built completely differently from the ground up. The message of fintech is do all the same processes, but build it with a different set of systems. And the message of micro housing finance or home asset loan finance is that housing is a unique collateral asset. It can't be moved. So you can put it on a cadastre. Those are the hands of Jokin Arputo, formerly of the National Slum Dwellers Federation in Bombay, pointing out a neighborhood that could be formalized. The built environment exists, but the cadastre is not caught up. Formality is a club that people want to be in. Lots of benefits. But it has an initiation fee. If you rezone the agricultural land, the land that was zoned agricultural at partition and has now become a slum, if you rezone it to reflect the fact that it's residential, that land immediately increases in value. And there's an instant tax that makes it unprofitable in the short run, illiquid in the short run, to formalize it. So formality has this initiation fee, which is fine if you can afford it, but if you can't afford it, it's a barrier. And formality has annual dues. You got to pay income tax, you got to pay withholding taxes. And then lastly, formality makes you visible, which means you lose control over your privacy, which means machines and distant people and algorithms can surveil you. That's not a happy thought. But formalization driven by digitization is inevitable. And I put up Thanos from the Avengers for a reason. When someone says they're inevitable, be careful. But here's why they're inevitable. Because health risks, the risks of global epidemic have been driven home to us, and the economic consequences of a panicked reaction to a global health risk are still with us today and will be with us for the next 5 years. The challenge of high-risk environments, whether this is aging risk or earthquake risk or climate change risk or disaster risk, is that response is reactive, it's expensive, it's scattershot. So you need big data. That's a picture from 1854 when an epidemiologist by the name of John Snow painstakingly went into the Dharavi of his time, the east side of London, and mapped where lived everyone who was sick with cholera and put it on a digital map, a hand-drawn digital map. Those red circles show who's sick. The blue circles are wells. And the aggregation of big data, 19th century style, enabled John Snow to observe something. Everybody who was getting sick drew their water from one well. And the solution to that particular epidemic was simple. They took the handle off that well. We have to build a post-COVID urban health infrastructure. It will take this planet 10 plus years to do it because it always takes 10 plus years to build a major infrastructure. They had to rebuild the entire water and sanitation system of London over 10 years. The largest construction project in the world up to that time. And we have to do it because housing is integral health infrastructure, not just for the poor people, but for everybody. And so I now have an imperative that everybody should be digitalized from a public health standpoint. But when we digitize, programs start top down and they become standardized and they become depersonalized. Touch requires a local counterparty. I put that picture up there and you all instantly know what you're looking at. That's a pharmacy. That man is a pharmacist. On his shelves are cures for everything that ails you. If he can understand your problem And if you trust him with these fundamental things, and if you speak his language, I deliberately put that pharmacist up there speaking Ukrainian, because if you can't talk to him and he can't talk to you, you don't trust him. And if you don't trust him, you're not going to take the pills that are in his little box. And the paradox of trust is that those who have the power must say to those who do not, I will trust you with something about myself before I ask you to trust me with anything about yourself. This is the hardest part of the humility of the educated. It's taken me 40 years to learn it. I'm still not very good at it. But I am inspired by things like the Dabbawala Network, which is a spectacularly granular system that is non-technological, but is information-based, and it is human and personal and high reliability. And against that, we have said in our technological wisdom that computers will do this for us. We have said that everyone should have the right to know if everyone else is healthy. And so in India, demonetization, which drove digitalization, and digital IDs and fingerprints and retinal scans enabled Arogya Setu, which was at the time it was introduced, the fastest downloaded app in the world, which has led to Aadhaar, which is leading to facial recognition. Efficient technology is like the flu. Sooner or later, everyone gets it. Digital knowledge is going to track your medical situation, the property's physical condition, the information environment, your behavior, the financial environment. And that's a permanent change, because pretty soon we are very close to net zero cost to user broadband. And here's another thing. I put a lot of science fiction quotes in here because I write science fiction, and science fiction predicted a lot of this stuff a long time ago. Larry Niven, freedom times security is a constant. To have more freedom, you must give up some security. To have more security, you must give up some freedom. And who are we giving it up to? We are giving it up to the Thanoses of our time. We are giving it up to Facebook and the National Security Administration, and to Aadhaar, and to computers, and to this inchoate thing we call AI, which is neither artificial nor intelligence, but what the heck? It is frighteningly accurate. And we need the human counterpart to that to make sure that if information is aggregated and made digital, it is used for the reasons we all want to use it for, and not for what somebody else wants to use it for. So I'm going to leave you with this idea. Scott McNealy, CEO of Sun Microsystems, 1999, said on CNN, you have no privacy anyway. Get over it. If we're not going to have privacy, then those who are the guardians of public information have to themselves be transparent and accountable. And that, folks, is a challenge. Thank you very much.
Thank you, David. That was a great presentation, and I think it will take us some time to really,
That's why you get slides.
To understand all nuances of it. It's been tremendous, and thank you indeed for that. Very, very insightful, very thought provocative, and I'm sure there'll be ways to carry forward your thoughts. Thanks indeed. I will now request Shilpa to do her presentation. Shilpa is with Reserve Bank Innovation Hub in the capacity of lead gender and finance. There's been a very highly acclaimed program called the Swanari program, which has been done by the Reserve Bank Innovation Hub, and we have been seeing that all over the place. It's really very eminent and laudable, Shilpa. Shilpa is a seasoned development sector professional with about 17 years of experience. She has made very significant contributions to financial inclusion efforts focused on micro housing and housing finance in multilateral agencies like the IFC and the World Bank Group, as well as within social enterprises in the financial inclusion ecosystem and the public sector. Her past work spans across India, Southeast Asia, and Africa, focusing on affordable housing, housing finance, and financial inclusion, alongside private sector partners, NGOs, and government bodies. Shilpa has also led a multitude of strategic business advisory projects, market assessments, impact evaluations, diagnostic studies, policy reform programs, applied research projects, and other market making efforts. Shilpa, over to you.
Thank you, sir. Thank you for having me on this webinar. Thanks to EGROW and to you. So just want to do a time check with the authorities on how much time can I potentially take for this presentation. I really don't want to keep you holding, Carmen, especially you. Let's say 4 minutes. All right, I'll take that as a yes.
Well, a little more than
All
that.
right, sure. I'll be as quick as I can. Okay, so like Mr. Verma said, my name is Shilpa. I work at the Reserve Bank Innovation Hub. I don't know how many of you know about it, but if you don't, please do look at our website and see what we do. We are a fully owned subsidiary of the Reserve Bank of India, and we were set up about 3 years ago. And our mission and vision and our reason to exist is to really sort of nudge the financial services sector to think about innovation and to catalyze innovation. So our vision statement is very simple, and we've kind of trademarked that term now because we realize that it's not a very common term in the financial services world. We aim to enable frictionless finance for 1 billion Indians, right? So what does that really mean? In our book, what frictionless means is any Indian, no matter where they live, how much they earn, where they're from, should be able to access, or what gender he or she is, should be able to access finance where she wants it, when she wants it, and how she wants it. So that's the way we typically define it. And how do we approach this problem statement? We lead by technology, and we believe, like David so beautifully articulated in the last presentation, digitalization and digitization is surely one of the best pathways to make that happen over a short period of time. So we lead by technology, and we work on several technological advancement and innovation projects with several partners in the ecosystem to ensure that we can enable access to everyone, access to finance to everyone who doesn't have it today. So we have 3 pillars of functioning. Typically, all of our work falls into one of these 3 categories of work. One is a process innovation. So a lot of the times when we work with banks, we realize that they don't really need big ticket, big rocket ship innovations, right? Very, very small incremental improvements in the way a financial service is designed or a financial service is delivered on the ground, the channel that is used, the means of collections can make leaps and leaps of difference. So we actually work very intensively with banks mostly, and some NBFCs and fintechs to see how can we take their existing processes and make small tweaks in it to make it frictionless and to make access and ease of use better, right? The second pillar is, of course, product innovation. We can't stop at process. There is still a long way to go, even in India, in terms of how a product itself needs to be designed in order to cater to a farmer or to a SHG group member or to a microfinance recipient, etc., etc. So product innovation is also a very core part of what we do. And of course, being a subsidiary of the Reserve Bank of India, people have called us the fun cousins of RBI, if I may say so. Our job is, of course, to channelize the voice of the industry back to RBI to see how we can enable policy, notifications and regulations that RBI puts out to be more industry friendly, as well as ensure inclusion in the last mile. So I think that's the third hat that we wear. So how do we fit in? Think of us as somebody who brings everyone in the financial ecosystem together. And our job is to really make sure that we can't do anything ourselves. We're a 40-member small team. It's through our partners, through TSPs, through innovators, through fintechs, through banks that we actually execute most of our work. So I won't spend too much time on this. Like I said, we work with a variety of stakeholders ranging from civil society to academic institutions to bank to fintechs and, of course, government themselves. So I wanted to, while we do a lot of things at RBIH, Today, I wanted to pick one particular initiative which I think is most pertinent and relevant to what we're discussing today. And what I'd like to call the core offering that we have within RBI is to enable frictionless credit. Okay, so what is frictionless credit, right? For customers, it means a few things for us. It means that access to finance should ideally be instant. No one should have to wait a week, a month, or go to the bank branch multiple times in order to access a particular service, be it savings, credit, insurance, or any financial service, right? The second, it has to be low cost, especially if you want to target the excluded customers, the emerging, the next 500 million, which is the completely new segment of customers which the banks don't understand. Financial services have to be low cost. The third, of course, is it is ideal for financial services to be digital and paperless, and that's when we can really provide a financial service at scale, and it becomes very, very hard if if processes are continue to be manual. There's continued subjectivity in the process. So I think digital and paperless is a way to go. And of course, we do understand that not everybody can go digital and paperless from day one. So we do also work actively on assisted models where there is a human touch. There's a human in the middle, but that human is there to make the customer's life easier rather than anything else, right? Fourth, it needs to be personalized. So a financial service that I would want versus something that Verma sir would want versus something that David Smith would want would obviously be very different. And in today's world where there's so much of information available about a customer to a bank, there's no reason why, financial services cannot be like my Spotify playlist on my phone, right? And it should be personalized to me, my needs, my age, where I come from, and how much I earn. Lastly, it needs to be transparent. I think fundamentally that is the pillar of providing responsible finance in the last mile. And any financial service, if it's digitized and if it's low cost and if it's instant and not transparent, it's really not serving the purpose. What does it mean for banks or for any financial service provider, right? It again has to be low cost. Banks are not interested in doing any of this unless it either helps them increase their top line or reduce their costs, right? So that there has to be an incentive for banks to provide frictionless credit. And of course, digital and paperless is another incentive for them to want to do this because that does reduce their operating costs. It reduces their human resource costs, etc. And of course, for banks, we believe that frictionless credit cannot be made possible in banks if particularly credit assessment and credit underwriting does not move towards more of a rule-based system over time. I think the element of subjectivity and the element of somebody being involved in giving that final go ahead of a yes or a no or a no go, despite a file being full of information, despite alternative data being available, is not going to work in the long run. Ultimately, for the segment of population that's possible, rule-based credit is the way to go, or rule-based financial services provision is the way to go, right? So what are the frictions in access to credit today? Large segment of India's population lacks access to credit, be it housing finance, be it MSME finance, be it any other credit, right? What is the key friction? If we were to really boil down and look at all the reasons and think of the top 2-3 root causes, it's really because of the lack of access to reliable data in a format that a lender can immediately take and use. There are others, but I think one of the fundamental reasons why we see a street vendor, a kirana shop owner, the tailor that you showed, David, in your presentation too, who's not able to access a working capital loan today and has to rely on a personal loan or a loan from a money lender at a much, much higher interest rate, is because the lender cannot see this person, right? In whatever traditional means that you and I can be seen. And of course, the absence of this data oftentimes leads to denial of credit. Good thing is we have several enablers in India. India has one of the best DPI infrastructure, and we are very proud of it. I don't think I need to speak much about it. There's so much of digitalization of services by state and central government happening in India, which means so much of data and information is available even about excluded segments. Thanks to UPI, thanks to COVID, thanks to the push that COVID gave UPI, we have a incredibly advanced improvement in digital footprints of all merchants and small businesses across the country, which is a great source of information on their income as well as expenses. And of course, one of the trends which we're seeing thanks to the VCPE sector is an influx of fintechs, which are doing some phenomenal work in enabling access to finance in the last mile. But the problem still is this data exists in silos. It's all in different places. Gig platforms have some kind of data. Utility service providers have some kind of data. Government has certain kind of data, and they lie in silos. And that's when we conceptualize this idea of the public tech platform for frictionless credit. It's a mouthful. We're still learning to brand our products well. But essentially, the idea of this was formulated about a year and a half ago, and it was announced by the governor himself in the monetary policy speech. Sorry, am I running out of time? Okay, I'll go very quick.
Yeah, good. If you could speed up a little.
All right,
Shilpa.
I'll go quicker. I'll move on to this. So what is the platform? And I'd like to spend a few seconds on this. So like I said, data and services lies in multiple silos with different providers, and banks will often have to connect to them individually to be able to get, say, a utility service data, a gig platform workers behavioral data, a milk pouring data of a dairy farmer working in a state in a small district in Gujarat. Everything lies in silos. PTPFC is essentially has been built with the idea that we want to democratize access to all of this data to various lenders across the country. So it's a central platform where we are actually collating several primary sources of data from the single source of truth, from the original sources themselves, which will allow for lenders to give instant, easy credit to the extent possible. Of course, there is always an assisted and a human element required in India, but yes, this will certainly accelerate the process. So we have land record data being digitized state by state. We have 5 states with real-time land record data available on the platform right now. We have milk pouring data from several milk federations from across the country, which allows for instant credit for dairy farmers. We have fisheries data coming up. We have data from Udyam and NABARD and several other platforms which is coming up. We have utility bills, payments data in the pipeline. So what will this allow? This will hopefully allow for much more reducing information asymmetry on a particular customer and ease of sanctioning credit to people who are otherwise unseen in the mainstream financial services sector. So yeah, just in terms of housing loan, we have several services already live on the platform in case any lenders are listening. We have several live data sources from government, from sub-registrar offices and e-courts on revenue records, municipal property tax records. We have live CERSAI searches enabled. We have litigation searches enabled on the platform to allow for lenders to search for litigation at all levels on a particular property, etc. So yeah, that's the public tech platform. Thank you for your time, and thank you for the opportunity to speak here.
Thank you, Shilpa. That was again very, very unique, and you are in a great position. I'm sure the sector will continue to benefit from the initiatives and efforts of RBIH and from people like you. Thank you very much indeed. Can I request Carmen to come next? My apologies, Carmen. Yeah, I know you are it's over midnight. Carmen Vicelich is she is a global founder and global CEO of Vicelich and based out of Auckland in New Zealand. Carmen is an entrepreneurial powerhouse. I also know, she is recognized as an entrepreneurial powerhouse with over 20 years experience in developing innovative technology and data solutions that deliver impact to make the world a better place. In record time, she has created several purpose and impact-driven global businesses. So that's indeed very laudable. Vicelich transformed. That's the company which she has globally founded. Vicelich transformed the property decisioning process, digitally connecting the entire property ecosystem of lenders, valuers, brokers, real estate agents, and customers in one smart platform to streamline property valuation and mortgage lending in over 2,200 cities around the world. Vicelich democratizes access to the latest property data to manage risk, including climate change and hazard data at a property level to enable data-driven decision-making. Outside the founding multiple businesses, Carmen is a well-known global public speaker, serves on several boards, including the UNICEF, co-chair of FinTech New Zealand and New Zealand India Trade Alliance, and is proud mother of 4 children. Carmen has been globally recognized for her entrepreneurial success, winning several awards, including the EY Entrepreneur of the Year 2023 in the technology category. Her business, Velocity, was named Scale Up of the Year India 2022 and won runner-up at the Singapore FinTech Festival 2022. Over to you, Carmen. We are looking forward to your presentation. You are on mute.
Please unmute.
Apologies, guys. Thank you. Thank you, Verma, sir, and I'm delighted to be here, and despite the late hours, so I'll just reshare again because it stopped sharing. So thank you, everybody. It's very interesting for me to share my insights, especially to actually be working in very mature markets that have lots and lots of data, as well as very emerging markets like India, where we very much, I'll just see if I can see my screen, won't be a moment, of emerging markets. Let's see, is that sharing now? Can you see my screen?
No, Carmen, we can't see your screen.
Okay, no worries. So I work in emerging markets as well as, it's not letting me share, so I'll just keep talking. Emerging markets as well as markets that actually are very mature and have lots of data. So I've really seen the journey of where we can go. So let's see, can you see my screen now? Is the slide sharing large? Happy days.
Yeah.
Large markets, and really the benefit of providing data for data-driven decision making. And many of the speakers have touched on this tonight. And so as part of housing, everybody in the world has a basic human right for shelter and for owning a home. And that's all of our personal dreams. And every single bank in the world has to validate the value of that property before they can say yes to a person. And we've seen a lot of the speakers really discuss the need for data to be able to say yes. Sorry, I just see it's not letting me change my screen. Oh. Gosh, is it, oh. Okay, I'll just sort of try and change the to the next slide.
Yeah, Vivek.
Oh, there we go. Can you see the next? Can you see the next slide now?
Yes, we can.
It disabled me. So data-driven decision making has been common, and actually, I loved what all the speakers said. Patrick said many of them have a small data footprint. So half of Africans have no credit score. And at the same time, we recognise, and the work that EGROW particularly does, is the need for policymakers, the need for credit decisioning, the need for lenders to make balanced decisions when they're saying yes to affordable housing, when they're saying yes to home loans for customers. And so we really see the benefit of data-driven decision making to be able to understand things like loan to value ratio, to measure affordability, to be able to have context of housing growth and when it becomes unaffordable, like we've seen in mature markets like New Zealand, and also to be able to manage risk and concentration to see, well, when might we need to say no. And interesting to see how we've gathered data on points of properties, and we saw the great example from David of cholera risk. And the way that we can do this is through capturing data at a household level and automating that decision process. Very similar from, as we've just heard, all of our speakers really talk to. So really a common theme here that for the bank to say yes, it really needs to have that automated decision making that doesn't have subjectivity. And as Shilpa talked about, that is really seamless and that is fully digital. And in more mature markets like New Zealand and Australia, where we have lots of data about the property, we know the size, we know all that information, we can run automated valuation models instantly, and the customer can put the amount they're borrowing and the bank can instantly say yes without any need to visit a property. As we move towards the right, with good data, a desktop is where a valuer doesn't even need to visit the property. But in emerging markets, how do we get to this stage of actually having data, as I showed on the previous slide, to make data-driven decisions, to actually say yes when a customer doesn't have a credit score and when there is no data? And that's where digitisation plays that part, and connected ecosystems become crucial. And so the work in India that we're doing across 2,500 cities is to put digital in the hands of valuers. So number 3 is on-site valuations. Yes? Yes? On-site.
No, that's fine.
Okay, it's the on-site valuations to put the digital tool in the hands of the valuer who's visiting the property, to enable them to geotag the property address, to capture that information and share it seamlessly to do their valuation calculation, and share that seamlessly straight to the lender. And suddenly the lender is able to no longer have valuations that are PDFs, where he's not capturing that data, where he's not able to validate that data or leverage that information for credit decisioning. But by putting tools and connecting the ecosystem digitally, we're able to capture new data. And by having a platform that's also benchmarking and doing quality control, the bank is able to say yes on the collateral risk. And I loved, as Patrick said, there's 6 reasons when the bank says no, and also what David talked about. So by actually validating that even if the customer cannot pay back the loan on that property, if we know the value, we can resell that property because the value is validated and a very reputable valuer has gone to the property and we have that data, the bank can say yes. And that's incredibly exciting. And that allows us to also evolve to access to pre-approved projects. And so we've really seen this evolution of governance, of the release of funding, the management of reputable builders, and the improvement across the ecosystem to make sure that for affordable housing and for those buying their first property, to ensure that that whole process is tightly managed. And digital platforms like our Build IQ module digitizes the pre-approved finance project. And that's incredibly exciting because it means for the person who saved their money for their deposit, for their first ever home, they can know that the bank is managing that in an automated digital process, that it's going to be seamless, that it's going to be easy, and that the disbursements of that payment and the ongoing valuations as the build progresses are managed, and there's no risk of the builder not completing and moving to the next project. And so it's been a huge process to build that and digitize such a manual process that had so many touch points across lenders, across lawyers for titles, across conveyancing, across developers, across customers. But by connecting the ecosystem again in this platform of Build IQ, everybody is able to have a more seamless process and the data is protected. One of the big trends that we're seeing globally is the emerging risk of climate. And in more mature markets, we really are able to start to capture new data. AI is making it more visible. Satellite imagery is also enabling us to quantify things like where the property is situated and where the risk will be. And there's more and more granularity and transparency. The danger or the complexity around this is a new trend emerging called climate justice. And when I was speaking in New York last year at the Climate Week and also at COP28, this was a very big theme because it's not just about building properties and houses, it's about where we build those houses. And it's also how we build those houses and the impact on people and planet. And so actually what we're seeing in markets is the need for the linking of insurance with ownership. And evolving to there, I also loved the slide that we had. What is the point of living on building a property if we don't support the planet? And our view is it's very much the impact on people and planet. And so some of the work that we're doing is actually capturing the carbon emissions of properties and portfolios. So not only can we see where we should be building houses, how we can say yes to people to lend on those properties based on independent validated valuations by the bank's standard valuation panel that they already use, through augmenting that with technology and data. But we're also starting to have transparency and visibility of climate, as well as measuring finance emissions. And then we're starting to see the evolution that is only going to accelerate, transitioning to sustainable housing. And we know that lenders get cheaper access to finance through green housing bonds if they can validate a property as sustainable green housing. And in some of the more mature markets where we work, we are able to work with lenders to put this in the hands of the customer to say, well, this is how you can do energy savings. This is how you can do AI. This is how you can do carbon reduction. This is how government is delivering grants for warmer properties that are not going to be leaky. And this is how there's access to green loans. And again, this is the ecosystem coming together. And this is also putting the information in the hands of the property owner and giving that trust that this is your home, and allowing income, allowing you to transition to a sustainable house. And many of the banks, when they are in the ecosystem of green bonds, are incentivized to do this and to support a property owner. And through sustainable housing, it can become more affordable housing from an energy perspective. So this is definitely a transition that we're seeing. So I know I went very fast. Hopefully that's understandable. And really, to summarize, we've gone from, we know that we need data for the bank to say yes for affordable housing. If we can make that data validated and reliable by leveraging the valuer visiting the property, by capturing that data digitally, by creating geotags that create addresses, that create property categories, and sharing that information, we can see these are all the micro housing. These are the houses being built in tier 3 cities. This is the valuation on this day of this property at this location. And we can aggregate that so everybody can make better lending decisions to say yes, because they can actually understand that the valuation is correct. So I encourage you all, and as an entrepreneur, a woman of action, I encourage all of the attendees today to be the change you wish to see in the world, as Mahatma Gandhi said, because the future is ours to create. So while change can be scary, it's pretty impactful if we all collaborate together, and amazing to see everybody's shared messaging today. Thank you.
Yeah, thank you. Thanks, Carmen. That was again very insightful, and we know how critical valuation of the property is for all the stakeholders, the lenders, the borrowers, regulators particularly, and the policymakers. We've explained in great detail, and I'm sure it has brought a lot of clarity in our minds. Thanks indeed. We have Arun. Arun Sharma is here from World Bank, Delhi. Arun, you're there. Are you?
Yeah. Hi. Can you hear me?
Yes, I can hear you. You can. We can't see your video. 1 minute.
I can see myself. Can anybody see me? Yes, I think my video is working.
Okay.
Yes, it's working.
Yeah. Okay. We are happy to be joined by Arun Sharma. He's head of the digital department, the World Bank, Delhi. Arun has been working as senior digital development specialist with the World Bank, where he leads the World Bank's digital portfolio in India. Prior to joining the World Bank, Arun was a part of the Indian civil services for over 2 decades. He has worked in various ministries such as Finance, Housing and Urban Affairs, Cabinet Secretariat, and the MeitY. where he was officer on special duty to the Honorable Minister of State. Arun was instrumental in setting up the direct benefit transfer mission in the Cabinet Secretariat. He has also worked with the International Finance Corporation in the payments practice in South Asia. Arun's professional interests include digitization, public financial management, government payment systems, digital ID, and financial inclusion. He holds an MBA from Indian School of Business, Hyderabad, and a Bachelor of Technology from the Indian Institute of Technology, BHU, India. Arun, over to you.
Thank you. Can somebody enable my screen sharing, please?
Vivek, can you do that?
Just did. Please try again.
Okay. Thank you. Is my screen visible?
Yes.
Yes.
Okay,
yes.
so since I'm the last presenter, I just have a couple of points that I'll make, and this is not on housing, but on the larger digital ecosystem in the country and the state of affairs as it exists today. Just 3 slides to end the discussion, and then I'll pass it over to Mr. Verma. So where we are today in 2024, we're looking at a new government next week, and a lot of things that were discussed regarding data sharing, regarding how platforms are built, regarding how data analysis and slicing has been done or can be done better to improve, in this particular case, the housing sector. But in almost all aspects of life, digital is proving to be where things are moving now. So we've had a multiple phases of digitalization in the country, and that happened with multiple efforts. So we had the National Health Mission, we had the NREGA, we had PFMS in the public finance space, and all of that created silos or different platforms. And there is a lack of a cohesive approach in the enterprise architecture that the governments follow. That's the main reason why we have interoperable data that can't be shared, lack of interoperable data that cannot be shared. And even though India is better off in the South Asia region, and compared to other developing countries, we are in a better spot, especially with the G20 meeting that the G20 presidency that showed India's leadership in the DPI, digital public infrastructure space. But when we go down to the state level interventions and to the deeper digitalization in various sectors, we are stymied by lack of data sharing, and that's one of the major challenges that we have. The RBI there's a paper last year which estimated that the digital economy was 222 million back in 2019, and this was an analysis that was done between 2012 and 2019, which showed that of the various sectors that were growing, the role of digital, and there are components, core components which count as digital, which are IT, ITS services, but also digital as the next evolution or the next phase of industrialization after I think electricity and the birth of internet was the last productivity enhancement, and next is digital as it stands. So the rate of growth in digital economy is close to about 2.5% compared to compared to the other regular sources of economy. And this also paves the way for the jobs that are coming into the future. And almost every sector has to adopt a digital strategy today, especially given the role of emerging technologies, AI, blockchain, etc. which is going to go more, but especially in the processes, we cannot ignore, you cannot survive if you don't have an online presence or you don't have a digital approach to your processes. And the other bit is the SMEs in India, which are close to 65 million, are not digital. So that's another area which is left out, which contributes a significant amount to the GDP, but that's been lagging again for various reasons, which has not been covered. Now, at the underpinning of all of this is the digital infrastructure, which comprises data centers and data center and cloud, connectivity, and cybersecurity, which seems that it's sufficient in India, but is in fact quite lacking. Of all the major economies, India is the lowest in terms of its data center capacity. The total installed capacity in India today is about 1400 megawatts. We have 180 data centers compared to over 5,000 in the US, 3,000 in China. Even smaller countries like Germany have close to about 600-700 data centers and much more installed capacity. So when we talk about deeper digitalization, that's the railroads that we need to prepare in the future. And the last bit is on the laws and the enabling mechanism. An interesting point is IT, information technology, is not a subject in either the union list or the state list of the constitution. And that has led to multiple laws being framed at the state level and at the union level. So you see possible replication or duplication of legislations and guiding principles in this particular space, which again, coming down to the first point that I made on data sharing. So we had the Data Protection Act that was passed last year, which is yet to be adopted. And that's the task for the new government, especially with the establishment of the Data Protection Board and the enactment of the rules, which will say what is the penalty on data breaches, how in the current context, how housing data is to be stored, how financial data is to be stored, how health data is to be stored, and the various provisions around that. So the operationalization of that law will take place now, but all that contributes to the larger trust that we have in the system or that is missing. And when we see that from a federal and from a state perspective, there is often confusion, which directly translate to the business sentiments. So these are very high level thoughts that I wanted to share here. I think everybody's touched on these aspects in some way or the other, but I wanted to just present the larger context in which we are operating in the country, and a lot more is to come with the new government, which will take shape next week. Thank you. Over to you, Mr. Verma.
Yeah, thanks, Arun. That was again very enlightening, and was something which I think you are in the best position to really share with us. Thanks indeed, and we look forward to a lot more work, of course, and initiative in this space by the government, both union and the state government. So thanks. With this, we are at the end of our presentations. Maybe if Charanji, if you allow, we can have a few questions. And
absolutely, it's
yeah,
very
maybe,
and very rare to get such a good team together. Please.
Thank you very much. Thanks indeed, and thanks to all the panelists. In fact, they've been their presentations have been very, very illuminating. Patrick, you did talk about the government kind of doing its bit in promoting the data or the information that they have. How does that convert into sound and sustainable policy making? Can you share some thoughts with that on that subject?
Yeah, sure. Thanks, Rajan. Thanks everybody for those presentations that I thought were really all very different in the approach. Important to recognize that we face a lot in trying to innovate within the housing ecosystem and the housing finance ecosystem is that a lot of times the policies that need to be in place to allow financing to flow to lower income communities or housing aren't there. And that means that a lot of times these the people who are living at the bottom of the pyramid are excluded. And I'll give you just a few examples. In many countries, if you are a microfinance institution, you are not permitted to lend for anything other than a business. And so if you are a low-income person and your local financial institution is a microfinance institution, and you want to go to borrow from to say, put on a new roof to either because it's leaking or to protect your house from the impact of climate change, your financial institution may not be permitted to make that loan to you because it's considered either because it's considered a non-business loan because it's for your house, or because it's considered a consumer loan because it's not for your business. And the financial institution, the microfinance institution, may not be permitted to make that loan to you because of the regulation that limits the types of business that microfinance can do. So that's just one example of the ways that a lot of times the regulation is not is allowing a large portion of the population to be excluded from the financial services that they need in order to improve and build their houses in the way that they do it.
Mm-hmm. Yeah, thanks, Patrick. I think it will continue to kind of, not really bother us, but at least we'll keep working on this. And we do imagine the government has a very, very important role in this. David, your presentation, of course, was great, and it was very, very thought-provoking. You did kind of indicate on the big divide between the formal and the informal, and the need to really formalize the informal sector. Do you see what kind of role played by digitalization or data in terms of bridging that gap, and how can the lenders or the policymakers use that?
2 or 3 things. First of all, build in customer choice on privacy settings, and similarly advance something akin to a customer's information bill of rights, the ability to gain access to and correct your digital profile. Fair credit reporting is a good example. Further, recognize that when you are empowering digital communication, you should also encourage, and this is another bit of epidemic, social media. Right now, social media is as virulent an epidemic as COVID was in certain ways, but you need to develop essentially the equivalent of social media antibodies. So bear in mind that we are going through a period of turbulence from the digital disruption, and you must constantly be making it possible for the people who have less, nevertheless, to have plenty of voice. As Elabat said 50 years ago, we are small, but so many. You've got to make sure that that voice is heard, and eventually the marketplace of ideas will work. It's going to be bumpy, though.
Mm-hmm. Mm-hmm. Yeah, it's interesting. Yeah, absolutely. Shilpa, I have a question for you. We are very proud of this Swarnari program, which has been initiated by Reserve Bank Innovation Hub, and you playing a very important lead role in that. How do you suggest the data or digitalization is going to help women empowerment?
Thank you, Verma sir. Yeah, I think share your sentiments on the Swarnari program. We're very proud of the work that we're doing there as well. So I think, sir, the digitization problem several times is gender agnostic. I think it affects women as much as men, but I think it does affect women a little more. I'll give you one example of how that's the case. So we know the self-help group movement in India, which is probably about 3 decades old. It's one of the strongest pillars of economic resilience in the last mile in rural India, and it's funded by one of the largest poverty alleviation programs, the National Rural Livelihood Mission. Unfortunately, while this is the case, and many women 100 million women belong to this movement, and they have been transacting in cash, in check, and maintaining books of accounts for over 30 years, but all of this remains completely unseen. So there are, especially this information that's available in women's collectives is something that is waiting to be digitized and be made available to the mainstream banking sector. So unfortunately, a woman in an SHG movement today is still considered new to formal credit, when that's absolutely not the case. She has been saving, she has been borrowing, she has been taking credit linkage from banks, but you and I as lenders or as regulators of the system does not see this. So I think there are pockets of data which lie, like this waiting to be digitized, and I think women will benefit a lot more. But in general, otherwise, I do find that lack of data is a gender agnostic problem. I think it exists across the board. There are other issues when it comes to women that, for example, while a woman street vendor may be using UPI to get payments digitally and those payments are being recorded in an account, very often the QR code belongs to her husband. So, and so the underlying account is actually her husband's or her father's or her son's or her brother's, right? So that again is a systemic problem which needs to be addressed when it comes to women. And it's not always to do with digitization, but I do believe digitalization of data, can do wonders for women's collectives in particular. So you're on mute. Sorry.
Yeah, it's very interesting. I said that's the way to go for the lenders. And let's see, it builds up the confidence of all the stakeholders. So your RBI's lead in that direction is truly laudable. Arun, can I have a question for you? This is, regarding the digital literacy and the kind of gap that we see there often in certain segments of the population. Any steps on the government side to really address that issue? Digital literacy or digital, gap?
Yes. So there are multiple gaps. If we see the total number of mobile subscriptions in India is now close to 1 billion. And if we see the total number of SIM cards, there are 2 parts to it. One is the total SIM cards that have been issued. They are close to 1.2 billion. And if you take the number of smartphones, there are 700,000 smartphones that are available in the market. And 700 million smartphones that are available in the market. And so people like us, we have multiple phones. The last part, which Shilpa also mentioned, is the gender and demographic gap in mobile ownership and the usage of that ownership. So we have confidence that's missing in the older population. The younger population, women who are living in villages, lack education and lack formal means of redressals. And all of this points to a gap in skilling. Now, there are many skilling programs that government has run with the RBI, with the Department of Technology, with various organizations. But it's so one is a supply side where the government is just providing that, and not just the government, there are many organizations that do that. The other is the demand side, not just viewing the recipient of this information as a passive strata. What happens when something goes wrong? So we all do UPI payments, we all do digital transactions. So if you have a wrong transaction or an incorrect transfer, what is your recourse? Where can you go? So till the time this confidence is there in the users, you'll always have that element of doubt. And that's why a vast majority of the older population refrains from digital transactions. We can, talk to all our parents and they'll say, no, something goes wrong, then I don't know. And of course, the fraudulent payments which are rising, this was a headline today in today's paper. So with all of the transactions that we keep seeing, the number of people on UPI has become stagnant, and that's a major cause of concern at 350 million. So there are 35 crore users that are there on UPI. That's it's a combination of bank accounts, mobile phones, linkage, and all of that have the facility to transact. And why this is not percolating into our tier 3, tier 4 cities or into our villages is something that we all collectively need to solve. Thanks.
Yeah, absolutely. Just a thought that the digital public infrastructure could have a component of digital literacy or digital awareness, digital training for those people. Just a thought.
Absolutely.
Okay, we have some observations also on the chat bot, and I see there's this good amount of appreciation and also questions relating to the digital exclusion or the outcome of various these steps or the measures the government has taken. They have also desired that the presentations be placed in the public domain. So that's something which I leave to Charan Singh and his team, and maybe we'll talk about that. Before we conclude, I think it's late for everyone. Prashant, would you like to very quickly mention about, you have already talked about the senior homes and the steps which I mean your research results and all, which are definitely concerning, very concerning. So let me conclude this session. We have covered a range of issues dealing with right from the informal sector issues on housing, the affordability and access of housing for the lower segment of the population, the bottom of the pyramid, the various policies and the strategies which the government has had on housing, data, and digitalization. The digitalization movement, which was launched in India through Digital India, launched in 2015, and the developments thereafter. The gap between the formal and the informal, which is of course very appalling, and which has a lot of issues associated with that, and more particularly the exclusion of that segment from any of the social welfare schemes or social schemes like sectors like the education, health, awareness, and stuff like that. Well, it's been a very wide range of issues, and I think presented with a lot of passion, with a lot of feeling, and we could see the force of conviction in all of the presentations. We're extremely thankful to the presenters and to the panelists who brought together a very good sort of collective collection of their thoughts and sentiments, their experiences across the globe, and I'm sure it would have benefited the participants and the viewers. We have some questions, of course, on this. I think we'll respond to the questions separately. With that, if Charan Singh, if there is no other issue, can we conclude and close this session?
Yes, I think it's been a wonderful, very wonderful presentation. Thanks to you for really requesting them and getting us to listen to them, their vast experience, and such rich experience amongst themselves. The ones who have spoken from outside. And Mr. Verma, you know everything about the Indian housing market. You have really been in the thick of things. And listening to them, and when we discussed, both of us, that you're bringing in something which is so important, valuation, and I struggle with this valuation all the time. I think you brought in for our knowledge a real appreciable effort has been made, and I want to thank you. One thing I have always been thinking, and I leave it to you, who would like to speak to us on this, and that is, our land records are yet not there. Land records are not fully digitalized. And I have a feeling, I think one of the speakers mentioned about the trust, how we trust the bank and how the bank trusts us. I have also a feeling, and I have experienced it actually, an erroneous transfer of resources sometimes can take a very long time for reversal or may not get reversal. And that is because the gap between the literate and the illiterate, and the gap between the banking individual who's banking regularly and the ones who are irregularly banking is so large. So I think the whole process has lots of, or call it, the whole process is extremely good, but in a country like India, we will have to so carefully craft it so that it becomes a success. So I must thank you for flagging these issues. And this is a very policy-oriented webinar today. Must thank you for flagging these issues and getting the best experts from across the world to talk to us. The challenges are ignored, but they can be handled, and one can step by step address them. But bringing them together is something. I must thank you, Mr. Verma.
Thank you, Mr. Charan Singh. Let me, for the benefit of all the viewers and all the panelists, give a brief. I mean, it's too late to introduce Dr. Charan Singh, but I think I missed that. Charan Singh is the CEO and founder director, EGROW Foundation. He is also the non-executive chairman of Punjab and Sindh Bank, a very old traditional commercial bank in the country. He was the RBI chair professor of economics at the prestigious Indian Institute of Management, Bangalore, India. He is a senior economist at the IMF, Washington, D.C. He has served as that as well, and research director at the Reserve Bank of India. Among other positions, Dr. Singh served on the board of NHB and the NAFINS. Dr. Singh completed PhD in economics from the University of New South Wales, Sydney, in 1997. He followed it up with postdoctoral studies at the Department of Economics, Harvard University, and Stanford University. With that, we thank Dr. Charan Singh and EGROW Foundation once again. And I thank all the panelists for their great contribution to this seminar. Thank you very much indeed.
Thank you. Now,
Thank
I
you.
must make two house announcements. First, the recording of this would be available on our website by noon. So I'm sure each one of you are going to benefit from this and would like to use this. And I myself am going to turn it over to some of the policymakers. And I think this is something so useful for all of us. The second announcement is that next week, similar time, we are having a webinar on Kautilya and economics. So call it Kautilya economics. So our friend from IMF Washington, Mr. Bala will be making that, Bala Sriram will be making that presentation. If it interests you, and I'm sure it should, we will next week around June 7, on June 7, we'll be amidst with the new results, and we will be talking about Kautilya economics. So I would welcome you for that. And I must thank each one of you today, Mr. Verma, and the team that you assembled, each one of you. I want to thank you for bringing your rich experience and knowledge to us, and really thank you for being with us at late hours. I understand one of the participants is past midnight, and as you mentioned, Mr. Verma, she's a proud mother of 4. She's up there so late. I must just sincerely thank her and you, and I appreciate her dedication that she's been with us today. Thank you very much. Enjoy a great weekend. Good night.
Thank you. Thanks, same to you. Thank you, everyone. Thanks, all the participants. It was indeed great having you all here. Thank you.
Thank you.
Bye-bye.
Thank you so much.
Bye.
Thank you.
Bye.
Bye-bye.
Bye.